Good day, fellow investors. This video I want to discuss your comments, and yes, the US dollar is a bigger Ponzi scheme than Bitcoin. That is correct, which are some interesting among other comments. Market indicators, quadrant improvement, strategy investing. Let's start. So, chasing dividends is a dangerous game, so many risks surrounding Petrobras. Why not buy a wonderful business like Amazon and Google and just sit back and relax? That's absolutely correct. So many risks with Petrobras. 13 dividend yield can go to 6, 4, or even 0%. And it all depends on oil prices going up and down. But there is also risk with Amazon. Don't forget the crash from 2021 to 2023. Also, that can happen again. Nobody knows with that, but it is a great business, and we'll discuss this more in detail, I think tomorrow, with a specific Amazon video. And this is something very important. I found it funny, JP Morgan, BlackRock, all involved, and people still call it a Ponzi. Well, do my homework, misinformation, but I agree on the comment. USD is a great Ponzi scheme because it is certain that the value of the current dollar will go to zero over time. Currencies, whatever currency you look at, are made to go to zero, and therefore I say, yes, Bitcoin is a great idea to counter for that, but when it comes to the Bitcoin, I look at the situation, at what's my biggest weight to it is that it's just a speculative asset for people to see it go higher. That's it for now. Maybe something else will be the solution to currencies, but usually it was owning businesses. So yes, I know currencies will go down. That's how it's structured. You own businesses, you own productive assets, and that's the best protection. Has been the best for ages. And this is just a speculative asset. 40% of people own it. You might call me an elitist, but I don't like to own what most people own. And that's it. Discussing the markets, everyone wants a bargain on everything these days, but bargains exist only when money isn't printed. So no bargains anymore, but that would describe an efficient market, and perhaps something that is also key to value investing. When we'll see bargains return, which is not anytime soon, doesn't matter. We discussed yesterday how much cash to hold, and then value investing is often about waiting, doing nothing, as what Buffett said. Buffett is mostly in cash now. He sold all his liquid positions, and he's waiting, doing nothing. That's also the key component of value investing. Nothing wrong with that. Maybe markets will keep going up, maybe not, but we'll keep doing nothing or owning hedges or owning productive assets. Nothing wrong with that. Now, this is something again that constantly comes into my comments, but I'm okay with that. Nvidia, Apple, Microsoft will outperform any of your stocks, Sven, that you discussed. Great discussion here with Matthew. From 1999 to late 2013, boring cyclical ADM that I discuss here delivered 300% returns plus dividends. Microsoft did nothing. That is different perspective. Most people focus just on the last year, but we are investors and we focus on the risk and reward. Never mind that my goal is not to outperform the market or Nvidia. My goal is to perform. I'm happy for you if Nvidia is another 5x going forward, great. However, I prefer to stick to my side of the quadrant because I want to perform with certainty, not risk on Nvidia's. And then many comments like that. How do you expect that the next 20 years Nestle will grow faster than Nvidia? And this is actually a great comment for Pavel, because I need to add a time component to my risk and reward quadrant. So I discuss stocks, but I don't discuss the time horizon of risk. When will those returns materialize? Nvidia might destroy all of these companies in the next 20 years. We'll see how that works, but I have to add the time horizon, and I have put it to, let's say, 10 years, and then over time we will elaborate more on this quadrant going forward. Don't forget, if you are new here, check this 9 stocks to buy value quadrant video. And that time component will also factor in the quality of businesses like Microsoft, because yes, the quality of those businesses will come up on the surface over a decade, 2 decades, but then it also depends on the price that we are paying for that. And now I'll try to implement into the quadrant that over time, 10 years, and then also quality and long-term outlook, short-term, long-term, will be, let's say, improved in the quadrant. Good points, guys. Discussing also the risk and reward. The S&P 500 is a bit riskier right now, but it's usually considered the benchmark that everything else is judged against. Shouldn't it be zero on the risk-reward axis? Actually, the 10-year Treasury has that place. And let's start with the 10-year Treasury. Compared to returns of the S&P 500, riskier for, let's say, perhaps the similar return when a benchmark. So S&P 500, 1% dividend, 3% growth. That's a 4% return over time, long term, 10 years maybe, and equal to the US Treasury, but far riskier from that perspective, because this is a certain return. So I have put it here, and then we'll build on it over the next 10 years. Why it is not here? Because then I would have to restructure the whole strategy there. But we start with less than 4% returns, Apple, Vanek, Nvidia's, Microsoft, and then we go to the normal companies, Nestle, 5%, McDonald's, Nike, and then higher to the food sector now. And now this is a great comment from Davor. The Shiller ratio, Tobin Q index, Warren Buffett indicator, and MS index, his personal favorite, are all deep in super overvalued territory. Let's look at these indexes. And if you look at the Shiller ratio, 1929, 1960s, 2000s, and we are now. Each time it was terrible afterwards. This is 50% down, 50, 70 in real terms. And if we go to the MS, the Mises Stationarity Index developed by Spitznagel, again, even more exacerbated. Each bubble with clear destruction following, each bubble with clear real returns, at least destruction following. For those who don't know it, the Tao of Capital, great book by Spitznagel, we discussed it in a video, and US corporate equity, total US corporate net worth, and when you compare it, you see the valuations are high there, and therefore another factor to look for, overvaluedness. Of course, we cannot know when will that change, but we can then discuss more. I regret to inform you that your analysis is largely inaccurate. It's crucial for you to gain deeper understanding of the current trends and development in the industry and information technology. And then finally, just before this comment on IT, this is a spam. Nvidia, Palantir, Tesla, Apple shares, and then they go into spamming. But yes, tech is great. At what price? What's the profitability of it? The internet did change the world. We had the dot-com bubble, the dot-com burst. Telephone changed the world. Some companies did good, some companies did bad. Car companies also changed the world. Rail companies also changed the world. So at some prices, yes, those are changing the world, but there are better prices and there are lower prices. So again, I missed this Nvidia investment, but it didn't look that good as here the comment replies. So I'm happy you made 100x on Nvidia and all of you, but there is something else that I want to discuss, because everyone is getting rich about Nvidia. S&P 500 missed huge gains there. Tesla, my value investors started cracking up and just ruffling some feathers by just mentioning Tesla in the comments. The key is that if you gained on valuation, Nvidia, S&P, Tesla, Bitcoin, to make a profit, you need to sell. That's the only way that you can lock in those gains, because it's not the businesses that are delivering values long-term, durable, etc. It's just valuations going up and down. It's just gambling, speculating. And to lock in those gains, you need to sell. And I want to see a comment, Sven, I bought Nvidia here, I sold here, and now I continue on. And then the problem is, okay, what's the next great investment that you will make? Nobody mentions marijuana. This is a great comment here. got an ad for ARK Invest before my video. I didn't even know that they do ads, but they need promoting because it's all a speculative game, which is then very dangerous. Maybe you made money on Tesla, but if you lost 75% on ARK, you are still at zero. So that's not investing for me. To gain on valuation, you need to sell. We gain from owning businesses and the value those businesses create. Thanks for watching. Hope you enjoyed these comments. Just easy chat, and I'll see you in the next video.